Joining us to make sense of this market right now is Michael Landsberg. He is CEO of Landsberg, Bennett Private Wealth. Michael, it's great to have you on the show this morning.
Thanks, Trinity.
So markets are officially open right now. What's your initial read on today's trading activity and investor sentiment?
I think there's a lot of worry about kind of what's going to happen with tariffs, because obviously we don't know. We got some confusion, but also the economic data coming out hasn't been great. We just got the biggest layoff announcement in basically 4.5 years. The companies are laying off folks. We do think the GDP is slowing. So I think while the tariff confusion takes full stage, a lot of this background is that the economy is deteriorating.
And as you mentioned, it's been a very choppy week after double-digit levies went into effect this week on countries like China, Mexico, as well as Canada. What is the investor sentiment right now? Do you see the market rebounding at all, or do you think that we're in for some volatility?
I think 100% we're in for some volatility. We're kind of in a wait-and-see mode right here. I don't think it makes sense to kind of jump in here because every other day, the tariffs go back and forth. If we're coming up with basically reciprocal tariffs on top of retaliatory tariffs, this could kind of snowball. At the end of the day, earnings have been very good. We're positive on that. But right now, it doesn't seem like a lot of reason to step into this and get smashed by news that comes out, basically headline news, where there's a lot of headline risk in the market and fundamentals don't seem to matter, at least at this point.
And the White House, they did announce a one-day-month tariff delay for automakers in these countries. How significant is this for companies like GM, Ford, and Stellantis?
It's basically it's a 1-month reprieve. Hopefully, this shows that the president and his team are trying to negotiate, permanent deals. The market can't really trade, and you can't model in, what's going to happen week to week, month to month. But it'd be nice to have this be a springboard to get some real negotiations in place and get some permanent agreement on where the tariff levels are going to be. But this back and forth is really tough to predict. And obviously, volatility, the VIX has jumped up a lot, both in stocks and obviously the MOVE index with bonds, because heightened volatility is where we are. Until we get some clarity, it's going to be where it's going to stay.
And the 1-month delay on auto tariffs has given markets a little bit of breathing room here, but do you see more exemptions happening in the near future, and how could that shape the market movement?
Trinity, I think it's going to be tough to carve out little parts and pieces of this thing. Everyone's going to have the president's ear. We want this, we want that. It's going to be tough to do that. And so I think what's going to happen is I think they're going to be broader at the beginning, and then maybe we get some opportunities to get some carve-outs. But ultimately, a lot of these things are a fairness. And this is what he's really appealing to. These reciprocal trades we're going in and saying, we're going to tariff you as much as you're tariffing us. And I think there's not going to be a lot of carve-outs in that space. But I think strategically, there's going to have to be some talks about how long do these things last, because ultimately it will affect the American consumer.
And jobless claims came in lower than expected, which is good. And we have the jobless report coming out this Friday. What is on your radar? What should investors be on the lookout for?
I think we're going to start to see weakness. We saw layoffs increase, highest in 4.5 years. I would expect that the job numbers are going to reflect that. They'll probably be lower. And again, we're seeing GDP start to slow. So I think there is a weakening of the economy. We've seen the bond market price back in potential rate cuts later in the year. And a month ago, we didn't have that discussion. So I think there's some issues here. Again, we think the volatility is here to stay until we get some clarity around it. The data that's been coming out has not been really great data economically. It indicates a slowdown. So I think you have to position for a little bit of a slowdown in your portfolio.
What sectors do you think are best positioned for investors right now, given the circumstances?
I think you got to go with what's been working recently. So, for example, we like Europe because obviously Europe is basically about a year behind us. They had a recession a year ago, and it seems as though they're coming out of that. There's some strength there. In the U.S., we think basically utilities and financials and even selected REITs may be an area to be in that are a little bit more kind of positioned for where we are. I think it's too early to buy tech. Tech is over-levered, and there's certainly going to be some pressure on the Mag 7, as you've kind of seen that. So I think those are some areas you probably can stay on the sidelines and wait to see what happens. But there are some areas, and again, overseas, I think needs to be looked at. They're holding up well. They're rallying. The dollar weakness is going to help some of those countries over there.
And bond yields and interest rates remain key market drivers. What should investors be watching out for in the Fed's next moves?
I think right now, as we stand, the market's kind of indicated with where rates have gone, that Fed cuts are a possibility here. So I think you want to look at that. There may be an opportunity to extend duration a touch for people that have been really on the short end of the curve. because obviously if rates do start to come down, that's a scenario where obviously the long end will probably perform better. But we certainly think rates are giving us an idea that the economy is slowing. They're telling us that, and they're basically, in essence, telling us that they're now pricing in some Fed interest rate cuts. And again, I think that wasn't something that we were talking about a month ago. But we may be in an environment where the economy is starting to slow, and this tariff issue may not help. That may only exacerbate the slowing down.
A lot to look out for. Michael Landsberg, CEO of Landsberg Bennett Private Wealth. Thank you so much for joining us on the show this morning.
Thanks, Rita.